I want to chit chat about the global stimulus that is going on right now, specifically in China, and why it's causing the Chinese market to rip to kingdom come and the US stock market to rip to kingdom come. I want to break down exactly what they did, why they're doing it, and probably the things you should be paying attention to moving forward in the short to medium term. China's biggest stock buying frenzy in years overwhelms the exchange. Kind of funny that I know here in the US, when things go haywire, we look at it like, why can't we buy? Why can't we sell? What's going on? Makes me feel a little bit more comfortable that it's not just us in the US that it feels like retail traders are getting screwed over. Apparently, it's just a global phenomenon. Chinese equities capped their biggest weekly rally since 2008 with a burst of trading that overwhelmed the stock exchange, underscoring a dramatic shift in investor sentiment after the President Xi Jinping's government ramped up an economic stimulus. In an echo of the rally that followed China's massive stimulus during the global financial crisis, their 300 large cap index shares soared 4.5% on Friday alone after really a phenomenal week, bringing this week's gain to 16%. Trading activity was so intense that it led to glitches and delays in processing orders, and I'll cover that in a very quick second. But in terms of really what's happening, like the layman terms, high level stuff, Chinese authorities unleashed a long hope for barrage of monetary stimulus on Tuesday, followed by vows from top leaders to do what's necessary to shore up the housing market and boost consumption. There's two major things you have to know. First of all, lots of stimulus, and it's one in the stock market, one in real estate. So talking about the stock market, here's really what's going on. Is one of the major things that the Chinese government has done is said, hey, they talked to all the banks and they said that the reserve requirement, the amount of money you have to have, we're lowering this. So this is going to spur new lending. On top of that, they also are continuing to lower the short-term lending rate, as in people can get capital for cheaper. So they keep lowering it. Literally, as we were sleeping, they lowered it again. So what's actually the impact of this? Well, right away, that's going to free up roughly $71 billion basically to go into the stock market. And they're basically saying, yes, we want you to buy. We're going to give you money cheap. Please buy, please buy, please buy, to the tune of $71 billion. But they thought, okay, $71 billion for the stock market. We're going to lower rates. We're going to lower the reserve requirement. We're not going to stop there. What's kind of being referred to as a SWAN program, they're freeing up another $43 billion, an additional $43 billion for companies to buy back their own stock. So basically corporate loans at a dirt cheap rate for these companies to do buybacks. And obviously we know with buybacks, it pushes the stock up. So that's all on the stock market side. And then when it comes to the housing market right here, I just want to make sure I get these numbers right. They're basically dramatically lowering rates and also the minimum deposit required to buy a second home. So we're seeing a giant stimulus package in the world of stocks and their equity markets, and also a giant stimulus in their real estate by lowering the rate. So basically across the board, they're making capital cheaper, and then they're doing also specific things with corporate buybacks, and then also in the world of real estate to basically say, hey, if you want a second house, we're going to make it even cheaper for you. So giant stimulus across the board. And as you might imagine, in the short term, at least, I don't know if it has legs on it, but it's causing quite a bit of FOMO. FOMO is running high for investors as Chinese equities have moved close to 10% in the past 3 days alone. Based on historic valuation, we think Chinese stocks have another 20% runway to go. And this is from Invesco Asset Management, Mr. David Cho. And he's not the only one that's very excited on this opportunity. I mean, why is this all happening? 1993, we're talking decades ago. China's market's been really flat. 1993 to now, if you held that entire time in the Chinese market, they're equivalent to the S&P 500, you would be down money. As in, it hasn't really gone anywhere in 3 decades. And in fact, in the past 4 years, their stock market and their real estate market has lost almost 50% of the value. So that's why. The big question of why they're doing it is because things have not been going well. So they're trying to do anything. Well, obviously, the US stock market, as you guys know, over the past 3 decades, has been rippity-skippity-doo-dah to the upside. So is the European market. And as you can see on the screen right now, even in India, it's a 13-bagger. So clearly the Chinese stock market and the real estate market has been under quite a bit of downward pressure. But with all these moves, have they been effective? Yeah, in the short term they have. I mean, look at this. It is up almost 13% in the past 5 days. 3 days alone, the past 3 days, gaining over 10%. The big question now that you kind of understand why they're doing the stimulus, specifically what the stimulus is, the real question is there an opportunity? And there are big fancy schmancy firms out there who say, yes, this is actually the opportunity of the lifetime. What you're about to listen to is a very quick clip from David Tepper. He runs Appaloosa Asset Management, and he's crushed it. In 2010, there's a famous video of him saying, buy everything, buy it now. And obviously he was very right. And as you're about to hear, he has a lot of similar rhetoric for the current situation in China. And for those of you who are thinking, should I listen to this guy? Should I not listen to this guy? Yeah, he's crushed it in the stock market, worth about $20 billion. Anyway, here's what he has to say on the current situation. Billionaire David Tepper.
Back to China again,
which I think is the biggest thing that people really have to go and understand it, because it has implications all over in bonds, currencies, and stocks. We didn't talk about the currencies and bond side.
But just with the stocks themselves, I'm just thinking of your positions. Alibaba was a huge position. You really loaded up in the first quarter. You cut back, I think, in the second quarter. What are you doing now? Did the China moves over the last few days, but just because you were saying in the past you wouldn't go more than 10 or 12%, or the most recent things
about
we've
to
seen
double up,
that you have about 12% of Alibaba. Does that mean you put those aside and you would own even more than that?
Look at that smirk.
The value at risk model is what I sleep at night. I had a fine. I went over that limit on the Fed announcement, okay, in the last week. I went more when they said a day or two ago on their Fed, and last night I did more.
Just Alibaba, or are you talking
everything.
JD, Baidu, PDD?
Everything.
ETF, I would do futures, right? Mm-hmm. Everything. Listen,
long to the tits on China.
I think I said everything.
And I remember when you said everything.
And you know what's good?
You were right.
Everything. Okay. So if they, this is incredible stuff for that place. Okay. So it's everything. Now I would love to see a pullback. Okay, because I will then my newfound limit, which might have been twice my old found limit.
25%?
You said 10 to 12 is double.
20 to 24%. So
I'm going to say what it is.
Is the limit 25?
I will have another newfound limit. Okay,
another newfound limit. He's buying it all.
Because again, you can look at these names, and you're talking about single-digit PE multiples with double-digit growth.
But you think there's
wait a second. Yeah. This is the other thing. You have some of these stocks with 50% cash.
Huge cash positions in some of these companies.
Cash, 20% cash, 30% cash. And that cash, depending how the Chinese currency goes, maybe if the Chinese currency is really strong, they'll want them to buy back.
Okay, so David, let me ask you this.
Did you see this thing? Buying back stock, when companies buy back their stock.
Right, but you're a hedge fund. How do you hedge your risk? What's the
I like this part
that you put on that, just in case?
You know what? I'm sitting here in a suit. My counter bet is that I don't care.
To summarize why he's so bullish on everything related to China is basically he's saying from a fundamental value, they are cheap. And then when you have cheap companies and global stimulus to the tune of anywhere from $142 to $284 billion USD, he thinks things are going to rocket. Now, obviously, a lot of people feel that way because there's so much trading going on that China's market marred with glitches as frenzy grips stocks. So we've seen this in the US where things go crazy, the brokerages get a little wonky, the tech can't handle the load, and it's kind of the new thing of A, B, C.
What a week for China, right? There is a saying on Chinese social media now. It used to be ABC, avoid or anything but buy anything but China, but now it's ABC, all in buy China, and that's suddenly
all in buy China being led by apparently everyone, and it's not just in China, it's going everywhere. European shares surged to fresh record highs as luxury giants rally on China's stimulus. That's in Europe, and then here in the US, breaking, the S&P 500 has now officially added $8 trillion in market cap cap year to date. That's an average of 43 billion every trading day so far this year. Now, okay, we all get this situation. We get what's going on. So now the question is what to look for in the short term. Well, in the US stock market, we're about to get into the month of October, and you can see October, November, and December with the Santa Claus rally typically favors the bulls. This is no guarantee, but historically, it very much does favor the bulls. The other things you should know is, okay, there's still big major moves going on in other countries, such as Japan, which as you can see, the USD yen trading pair just dropped because they got a new PM. So worthwhile to pay attention to there because we obviously know there's still concern of what's going on with the yen carry trade. But I would highly recommend paying attention to the semiconductor space. Micron just reported setting up the big guys, NVIDIA, AMD, Intel, Qualcomm, semiconductors. The whole AI play, crypto, esports, that's the hot thing right now. So pay attention to if this sector continues to grow and grow and grow. I know people are calling it a bubble, but that doesn't mean the bubble can't keep getting bigger. Eventually it's going to come down, but that doesn't mean it has to come down tomorrow. So that's another major thing I would be paying attention to on top of seasonality, on top of to really how much more stimulus is China going to do? What impact is it going to be on other players? So clearly watching semiconductors. The other thing I want you to please pay attention to is what is going on in the world of luxury brands. The way this is all playing out and the desire from China, this is probably going to be really, really positive for high-end luxury brands in Europe. So please pay attention to that. Also pay attention to commodities and also directly pay attention to the Chinese yuan because all of these things, semiconductors, European luxury brands, commodities, and the Chinese yuan are all probably going to have a sustained bullish push to the upside. So without a doubt, those are going to be on my watch list. Very exciting times. Who knows when we're going to get another opportunity like this from a fundamental perspective, worthwhile to be really, really paying attention right now.